Ouch for the British blue blood bank. HSBC taking another tumble this morning in London. Trading, pull it up and see down. It was down like 17 and a half or 18p. Stock at HSBC diving below 60 bucks Hong Kong yesterday here in local market trading after a rebound last week on refreshed concerns that the bank is going to go screaming for more capital. You may remember that everything kind of hit the fan at the same time with downgrades and worries that they might suspend their dividend and they might have to raise 16, 20, 25, 30 billion, something like that, on more concern over rising loan losses and weaker revenues. Will they or won't they? Looks like we're not going to know until they actually announce their results for last year next month. It's going to be a long waiting game until then. Anyway, HSBC stock taking another dive on capital concerns. And is this a specter of SARS in 2003? Not quite the case, but negative equity cases. That is where you owe more on a home mortgage here in Hong Kong than the home is actually worth on the open market. Cases have tripled with the last reading. According to the Hong Kong Monetary Authority, we're at about 11,000, or about 2 1/3% of the total number of outstanding mortgages, and the combined value of outstanding loans in negative equity hit 25 billion Hong Kong as of the turn of the year. Sounds like a lot, but it's still a far cry from north of 100,000 back in the summer of 2003 at the height of the SARS epidemic, which completely obliterated the mood here. And one stock which is not going to be trading when the market opens at 10 a.m. local is PCCW, unless they lift the trading ban. Stock was suspended because of speculative press reports. In a nutshell, there's a buzz that some insurance agents were offered 1,000 shares, I guess that's one board lot, right, in PCCW if they agreed to support a takeover plan for the phone company at the upcoming February 4 shareholders meeting. Richard Lee, the chief of the company, has been trying to privatize the company. This is not Richard Lee. In fact, this is Brook McConnell from South Ocean Management. Good morning, sir.
Good morning, sir.
You saw these reports yesterday on PCCW?
I did.
What did you make of them? If true, that would be, wow.
I think it's
like
kind
a
of
low point, wouldn't it?
Opening story here. There's the vote tomorrow. They may have to delay the vote to make sure that this is all correct. I don't know what's going to happen. It's kind of an interesting, everybody's got to stay tuned. They closed trading yesterday.
You have any stock in PCCW?
No, I don't.
I mean, look, if somebody's offering more than the market value in this day and age, in this kind of a market environment, don't you just kind of cut and run?
It's certainly the major shareholders, with their share prices down at levels that they are today, are definitely want to do something to take advantage of it. I'm sure that's what's going on with the thoughts of PCCW. What's come up here, though, is just amazing. It's just kind of a, wow, here we go, breakfast, at the financial markets, and another story coming out. So, yeah.
David Webb kind of blew the whistle on this one from website.com. The guy who owns stock in just about every Hang Seng company. He's going to be on the, what day is today, about Tuesday? He's going to be on with us at like 11:30 tomorrow morning on right here on Bloomberg TV. Terrific. So if you want to hear from David Webb, do feel free to tune in. Are there going to be more privatization exercises coming? I mean, a lot of these stocks are cheap right now. And if I was the chief of the company, I might say to myself, I am sick and tired of shareholders. They're just nagging like a thorn in your side, like a maggot under your skin. Maybe it's best to go private so I can do business my own way.
Yeah, yes and no. It depends on each particular situation. A lot of companies want us to be public so that they can take their annual report around to new customers and clients and say, here we are, this is what we do. We're an open,
They get attention, too. The press covers them. If you're private, nobody cares.
So if you're private, it's much more difficult. Then again, it's very difficult to stay public because the cost involved of being a public company are onerous. Yeah. But I think, and David will support me on this, I'm sure, I think these public companies ought to be more transparent. They ought to take their earnings and let us know every quarter what's going on. So, I mean...
You're a big fan of quarterly reporting?
I am a big fan of quarterly.
Don't you think that gives people myopia, though? It's like they concentrate on 12-week movements and, short-term results rather than long-term strategy. At least that's the argument of, like, old bellwethers like HSBC.
I think that's insulting. Because I'm not going to judge.
I'm not saying.
I'm saying. I'm saying it's insulting to somebody who's, anxiously an owner of a company. And now, if you're just speculating, that doesn't matter. But that's not what we do. We want to know how a company's doing because we want to benefit with the equity in a company longer term. So I think that would create higher values in the stock markets here. Better transparency.
How you doing? Year of the Ox got off with a bit of a bang.
Yes.
Hong Kong went up and then went down.
It went up in, you know, we kind of bottomed at the November. That was kind of the end of the liquidation phase and the deleveraging. And then December was a rebound, and then January is disappointing. So we were soft. We were down for the last month, but not quite as bad as overall markets. Overall markets really had I think New York, U.S. had the worst January ever, I read yesterday. So it's not a good start for the year at all.
What's going on here? Here's your composite index. You're just barely outperforming.
Correct.
The Hang Seng.
Correct. Why?
Did you outsource everything to an ETF? You buy the tracker fund?
No.
That's not what you get paid for.
You know, the values we've seen have been in the non-index stocks. And in that arena, which are the non-index or smaller cap stocks, that area has been decimated. And that area we've focused on and probably stayed a little too long in some stocks that were coming about in their business plans. They were greenfield businesses. Got some companies in environmental type areas or agricultural conservative areas, conservation areas that you know, when we hit this market downdraft, they did not perform well. People wanted to get out of them.
Yeah, there are multiple reasons for that. They're not, sometimes fundamentals have nothing to do with it, but people are liquidating whatever they can get their hands on. We're going to be right back, Brooke, a little more. We're going to actually go through some of those individual picks which we're talking about. There's some down, some up. Hopefully most will be up as 09 progresses. Brooke McConnell returns right after this.